One of the biggest lessons I learned in my trading career is investors care more about the risk than the return. If you give them a high return, they'll think about the risk. If you give them a good risk and a good return, they'll love it. What's up, traders? Welcome back to Bangkok in Thailand. Today I want to share with you something about trading returns, and more specifically kind of a question I get a lot, and that question is, what kind of return do investors want on a trading account that you trade for them? Do they require like a minimum of percent return? And what kind of can you give them so that they're satisfied or not satisfied? And how do you kind of deal with making sure you provide a proper return to them on a yearly or monthly basis? So I want to address this with kind of like 3 points on different things. And the first thing I want to say is, trading for investors is a little bit like dating. You gotta treat this the same way. You gotta be able to kind of present your stats the right way and kind of like deliver on that later on. So I'll talk about 3 points that I want to share with you that will help you out to kind of provide proper return and work on your skills if you're not quite there yet. So first things first is, you gotta think about investors care a lot more about the risk than the return. And that means that there's this measure of return to drawdown, and that's what I've seen most investors look for. You gotta be able to think about your returns in terms of that, as opposed to just returns. They're not returns, they are return versus the risk you take. And so think about, what is your return on a yearly basis? Is it maybe like 20%, 30%, maybe 80%? That's your return. It doesn't matter, but think about what your return is, and then think about how much is your drawdown on a yearly basis. Now, if you have your drawdown usually like in a month, then just take a month and do that calculation per month and try to see what is your return on average on a drawdown. So let's say you make 80% per year, but your drawdown maximum you've seen is like 30%. Well, divide 80 by 30, that gives you 2.67. I just had to calculate this myself. But so that's the principle. Like, try to calculate how much is your return over your drawdown. And a good rule of thumb here is that investor will like something beyond 3. So 3 of return for 1 of drawdown, not the other way around, but like you get more return than drawdowns, 3 times more of your drawdown. So that's a good rule of thumb you can start with. And then if you can make better than that, of course, always better. But start with 3 to 1. And if you feel like you don't make that cut, like you don't make 3 to 1 of return to drawdown, you either have to work on your return, make more return without increasing your risk, or reduce your risk. So try to kind of cut your drawdown a little bit more. And those are things that are not hard to do. You just have to kind of explore what you trade now, look at your stats, and find ways to improve your stats. Okay, and that's pretty much it. Now, the second thing is, I've said earlier that trading for investors was a little bit like dating, and that's right. So you gotta make yourself attractive. And the way you do this is by 4 different parts. Now, you gotta kind of think about, well, if you have like really good return, and if you do like 80% a year of return and 10% drawdown, if that's your stats, then you're perfect. You don't need to kind of work on your attractiveness too much, because you're already attractive with your returns. But if you fail to reach that, if you're like at 3 to 1, or if like you have a little bit more return, or if like your returns are not very of 3 to 1 compared to your drawdown, then you gotta work more on becoming attractive. And that's kind of the second point I have here. How to become attractive in trading for investors. 4 parts. You gotta work on diversifying your risk, so you will trade like different market, different strategies that are not all correlated. That helps be able to kind of trade more and provide more return without more risk. Or you gotta work on your deal with investors. So I've seen people do where the first 15% of return that they make in a year, there's no commission. They don't get any money on that. That's just like a base minimum. And when they make beyond that, then they get money. Okay, or they will say, well, if I don't make X amount of profit per year, then I don't get paid. Okay, that could be a way to do it. That's something you can do only if you're like quite experienced, but that's the way to do it. Or let's say you do something where it's like you start lower and then you improve. Okay, we'll talk about this in the 4th point. But that's kind of like a way to kind of structure your deal so that it's more attractive to the investor. Or maybe you say something like, I don't take any commission on the capital, take only a commission based on the profit, which is already better than most people. Most people will take like a fixed cut, like a 2% of the capital per year as a commission, and that might not be appealing if you're starting out and having much experience. So you lower that, you say, I'll take only like 20% of the capital and that's it. And you can always renegotiate as time goes by, of course, but you start to be more attractive and you work on that until you build your skills and you're comfortable with the investor. Okay, now third thing you can work on, so we've talked about risk diversification, we've talked about the deal with the investor. Now the third thing you can work on is make sure that you fit whatever you trade to their preference, their risk preference. So if they're like really risk averse, some people are just gonna show up, like traders are gonna show up and say, well, like, this is what I trade, deal with it. But like, that's not how you wanna do things. You wanna be able to kind of fit what you trade to their risk preference, what they would like to risk. And if your risk is too big for them, then reduce your risk. Find a way to kind of risk less per trade. Even though your returns will be lower, they will be happy to see that the risk is lower. And that's how you can do things to ensure that they will like what you trade, and you'll be way more attractive than a trader just showing up and saying, well, this is my risk, deal with it. Okay, that's much better to adapt to the investors instead. Okay, and finally the last part of this, of course, is having a growth plan. So what if like you are not that experienced in trading for other people, you've been doing it for maybe a little bit, maybe not at all. Well, like some people are more experienced, they've got more stats, more track record, maybe more profit to draw down and stuff. How do you kind of go beyond them? How do you actually get investors? Well, you gotta show them that you're willing to improve. You gotta plan to grow, to become better. Explain them the plan. Oh well, so now I'm working on this and that, I back this and that. I do research on this, which could be promising. Whatever you're working on, whatever plan, you gotta progress and grow. And these things that when you share them with people, they'll start to believe in your vision. And that's just a kind of addition to help you out get deals with investors that are private, so that they will invest in you and kind of trust you with them. And of course, like, you gotta deliver on your growth plan. Like, just don't just say like, oh, I'll become better, I'll work on this and that, I'll do all these things, I'll review everything, my stats every month, and then you don't do it. Like, that's not what you want to do. You want to be able to improve, so then that you have a growth plan and execute that plan flawlessly after. Okay. So as you guys know, my goal with this channel is to help you guys be able to develop your trading skills for more freedom. I want to provide you with interviews, tips, motivation, whatever you need to get to trading for freedom. You can be able to travel the world, whatever you love. And that's my goal. So if you guys want to hear more about this, you want to get more resource and more help for your trading right now, especially into Forex, click subscribe, click the bell next to the subscribe button as well to be notified of future videos. And for now, we'll just get back to the video. And that brings us to my kind of third point for this video. So we've talked about the return to drawdown first of all, then making yourself attractive. But the other thing you gotta always keep in mind, this is really important, is always under promise and over deliver. In the sense that if you're with an investor and your maximum like return per year for yourself has been like 100% in a year, don't say, well, my return is 100% a year, that's my typical return. Don't say that, because that's stupid. And don't even think about saying, well, my return is up to 100% per year, because they will have that mental picture of the 100% per year. Okay, if you want to be able to kind of create a good relationship with people, with investors, and kind of work for them and work for them long term, you gotta always under promise and over deliver. So think about the worst case scenario and give that worst case scenario to the investor. Well, I might make, let's say, 20% a year on average, and then end of the year you're making like 50% this year. It's gonna be happy. Okay, or even if like the worst case happen, you make 20% a year. No, that's not that bad. Like, it's still fine, it's still happy. Or you make 18% a year, still happy. It's not that bad. But if you promise too high and you fail to reach it year by year, or if you fail to reach it even the first year, you might not get that contract next year. So you want to set the expectation right, and that will allow you at the same time to work only with people that are really understanding the game. Not with people that like think you can become rich quickly or think they will double their money every year, but people that understand that this is a long-term game. There will be some gains, some drawdowns, and that the returns won't be crazy big, but that they will grow their money more than most type of investment. They'll grow their money more than in a stock, more than in a ETF, more than in real estate, which doesn't bring much money anyway, but they will be making more money than most investment, and that's your goal. Okay, if you can show them and deliver on that, that's top notch, you're good to go. So hope that makes sense, guys. As a quick recap, we've talked about, don't think about like what return you can give them, what return they ask for. Give them a return over drawdown that's attractive. Now make yourself attractive if you're not there yet, a few returns lower than most people. You gotta make yourself attractive in different ways. We've talked about 4 of them. Go back and watch them if you forgot them. Then always under promise and over deliver. Really important to understand. And here's what to keep in mind to finish with. If you're starting out at this right now, you might not have extraordinary returns, but you can make yourself attractive in different ways, and that's what you gotta work on. Now there's gonna be no excuse to not do the work, not show up, not work on yourself, because you can always do it. You can always make yourself more attractive to investors, and that's the goal. So comment below with your thoughts as always on this. If you have any kind of experience in that, trading for investors and seeing kind of what they like, what they don't like, comment below with this in the comment section. As always, here are a few comments that pass you. We appreciate you guys for leaving comments as always in the comment section. Subscribe if it's not done yet, and I'll catch you back here in Bangkok for another video tomorrow. Ciao.